Tonight we've got Bill Neville from the Entrust group. We're going to talk about self-directed IRA. This is a really powerful platform for building wealth, for maximizing your savings returns. I've known Bill for about 2 years, and I think I opened an Entrust account within about 5 or 6 days of meeting Bill. And just kind of understanding how powerful it is. I know Chris, I'll give him a chance to talk. I know he's itching because he also opened an account with Bill. But I won't steal too much of his thunder. But I'll say that I've had a good investment with this, a property here in California. It's actually a flip that another person I know is doing. And I'm just getting incredible returns on this. If you're a real estate investor and kind of apply that knowledge of, house flips or buy and holds or really any type of real estate transaction, as long as you're not involved directly, is on the table. Bill will talk more directly on what you can and can't do. Chris, did you want to add anything about your kind of background with the self-directed?
Yeah, I want to kind of mirror what it is that you're saying and make sure that everybody on the call knows that you and I didn't just meet Bill and say, "Hey, Bill, would you like to be on our webinar?" We both have independent from each other, have a significant amount of assets placed with the Entrust Group. I use mine for private lending and investing in syndications mostly, but there's a lot of different things you can do with it. Yeah, that's basically all I wanted to say. My experiences with the Entrust Group have been good as far as, I've had great service from them and from Bill in particular. Bill is our, what would you call it, Bill? A business representative?
Yeah, my title is business development manager, but really, I'm whoever opens an account that's in my region, I become your point of contact. So, yes. I have an assistant, I have an associate. Between the two of us, we, instead of just calling up an 800 number and getting whoever answers the phone, you have my contact info, and then my associate Jake. Between the two of us, we handle anybody who opens an account, and I have basically a quarter of the country. So anybody who opens an account in my state, in my region, then I have counterparts that have other parts of the country. So our business model is based on providing a single point of contact for all of our account holders so that they have an individual's phone number and email address that if they have questions, they don't just call Entrust, but they call my title is business development manager. You can call me your rep, whatever term you want to use, but that's how we operate.
That for me was the main selling point, because let's be honest, all this stuff, and then I'll give it back to you, all this stuff is pretty scary and unknown when you first get into it, and the transition was really smooth, because whenever I needed something, I could just email you and say, "Hey, what do I do?" or "Who do I email next?" And it was always a very quick process. Anyway, with that, I'll give it to you, Bill.
All right. So, Ryder, what are you going to give me? Give me host capabilities here.
Yes. So you're now the host, so you can just pull up your share screen and throw up your PowerPoint. We'll get going.
Okay. I'm assuming everybody can see that.
Yep. You just want to throw it into presentation mode. There you go.
Yep.
Let's do this.
Okay. All right. And Ryder, everybody's on mute at this point, right? And then as we get to the end, we'll take them off mute and take questions. Is that the plan?
That's right.
Okay. All right. Very good. So, thank you, Ryder and Chris. They've been, I've done a couple of presentations for Ryder's Meetup, and I've got another one coming up in March. And, they are account holders, and as much as anything, they are been very supportive of the concept of self-directed IRAs and educating people about that. And that's what I'm here to do. There's going to be educational. I'm going to explain what self-directed IRAs are, some main things that you need to know, and then take questions at the end. So, just make notes of what you want to ask, and then we'll get to them at the end. So legally, I'm required to put this information up. Essentially, what this says is that Entrust and myself are not financial advisors. We don't give advice about what somebody should invest in, or sell any investments, or recommend or promote or endorse any particular investment. What we do is we provide the administrative and custodial services for people who want to invest in non-traditional assets inside the retirement account. And what's a non-traditional asset? It's anything other than stocks, bonds, mutual funds. So real estate, precious metals, private placements, promissory notes, trust deeds, tax liens, anything that's other than stocks, bonds, mutual funds. And we'll get into that a little bit more as we go along. Real quickly, a little bit about Entrust. Again, we provide administrative and custodial services for what are called self-directed IRAs. We've been in business for about 36 years. Need to update this slide. We have over $3 billion in investor assets. I think we're up at about 3.3 at this point. And the majority of us, including myself, are certified IRA service professionals. And we are kind of the excuse me, we are kind of the recognized educational leader in our industry. We're the only company in our industry that has been certified to provide a continuing education program for realtors and CPAs. We have a class that's a 2-hour, 2-credit class, again, for realtors and CPAs. So if there's any realtors and CPAs and want to invite me to come into your office and give this class, there's no cost to do it, and you earn two CE credits for it. So we're going to talk about what is a self-directed IRA. We're going to get into real estate IRA specifically a little bit, what the benefits of self-direction are, different plan types. Really important, disqualified persons and prohibited transactions is really key to have an understanding about that. Give you a few examples of some self-directed IRAs, and then how to get started, and then we'll Q&A about it. So what is a self-directed IRA? It's simply a retirement account in which you make all the investment decisions, and it allows you to hold non-traditional assets. That's all it is. So the type of retirement account is still a traditional IRA or a Roth or a SEP or a simple or a 401k, or you can also self-direct your health savings account or educational savings account if you want to open those types of accounts with us. So a self-directed IRA is not a type of IRA. It's a marketing term. It's an industry term that, again, means you take your existing retirement account, whether it's a traditional or a Roth or whatever, and you make all the investment decisions, and you can hold non-traditional assets. So it gives you the ability to diversify outside just stocks, bonds, mutual funds, and invest in things like real estate is obviously very popular within our industry, or syndications, which aren't technically real estate investments. They're an LLC, but they still ultimately lead to investing in real estate. So hedge funds, startups, a lot of people are using their IRAs to invest in crowdfunding portals. Pretty weird. Somebody invest in a racehorse, in cattle, in a bowling alley. Like if you can imagine it, you're allowed to do it inside your IRA. And I'll get into the things that you can't do. In order for it to be considered a retirement account, the account has to be held by a third-party custodian or trustee. That's Entrust, right? We provide the administrative and custodial services for your account. So what are the benefits? You get to take control of your investments. Instead of having some broker who says, this mutual fund, that mutual fund, and this mutual fund, and now you're really well diversified and you don't know anything about the funds other than you've got a broker who's telling you that those Vanguard funds are really good investments. Well, if you understand in real estate, or if there's a business that you think is a good investment, or you have somebody who wants to borrow your money and is willing to pay 10% interest, or whatever it can be, you're allowed to do it inside your retirement account, and this gives you the ability to have more control over the decision making. And again, as I mentioned earlier, it allows you to diversify and not just be locked into the stock market primarily, which most mutual funds will be. And you still get the tax benefit. So if you buy a real estate property inside your retirement account and rent it out and later sell it, all the proceeds go into your retirement account. So there's no capital gains tax. It's just a way to grow your retirement account. So all the growth is in the revenue generated by it, the rent payments, the capital, the not the capital gains, but the gain in the sale of a property. Let's say you do a fix and flip. It all goes into the retirement account, and depending upon the retirement account, that's either tax deferred or tax free growth. If it's a traditional IRA or 401k or SEP or simple, it's tax deferred. If it's a Roth, it grows tax free. So these are the different plan types. So again, you have to choose, when you open an IRA with us, you have to choose a plan type. There is no plan type called self-directed, but all these types of accounts can be self-directed into whatever you want to invest in. So traditional Roth, SEP, simple. We have an individual 401k plan for business owners, their spouses and partners. If the company has employees, it's not, our plan is not available. And then again, if you have a health savings account, if you have a high deductible health plan with a health savings account, you can self-direct that. And then if you want to put money away for kids for educational purposes, you can self-direct your educational savings account. What are the investment options? It's easier to talk about what you can't invest in than what you can invest in. This is just an example of real estate one specifically. So as you can see, any real estate can be invested in. It just has to be for investment purposes only. So single, multi-unit homes, commercial, land, offshore, pretty much anything you're allowed to invest inside your retirement account. As I mentioned, it's easier to talk about what you can't invest in. There's only 3 things that might be considered asset classes that your IRA is not allowed to invest in. Those are collectibles, life insurance, and S corporations. Your IRA cannot invest in an S corporation due to how the taxes are filed for S corporations. Also collectibles. So as it says on there, work of art, rug or antique, metal or gem, stamp or coin, or alcoholic beverage. Notice the asterisk next to metal or coins. That's because you can invest in precious metals. You can invest in gold, silver, platinum, and palladium, and where it says down at the bottom, of certain purities. So there is investment grade metals, and then there is collectibles. So it's just basically coin collections. You can't hold a coin collection inside your IRA, but you can invest in precious metals that are sold by dealers as investments, as opposed to coin collections. Note it says on there, any alcoholic beverage. Just to give you an example, you can't hold wine inside your IRA, but you could invest in a winery, right? One is a collectible, the other is considered a business. So you can invest in alcoholic beverage companies. If you wanted to invest in a winery, for example, here in Northern California, can't hold wine. All right, so those are the only things you can't invest in. Other than that, you're allowed to invest inside, you're allowed to hold the asset inside your IRA, as long as it doesn't meet the disqualified persons and prohibited transaction rules. And what that states is that certain people are considered disqualified from doing business with their IRA. So a list of disqualified persons are you as the account holder, your spouse, your ancestors, and your lineal descendants and spouses of lineal descendants. So your parents, grandparents, children, grandchildren, all the way down and up the line. And then IRA fiduciary is also on there. As an example of what potentially is a fiduciary is if you have your own company, your IRA, and you have a 401k within that, you're the fiduciary of your 401k plan. A fiduciary could be a CPA, it could be a lawyer. They're not allowed to also do business with your IRA. So some examples, and I think actually later on in the presentation we give example of these, but an example of, well, let's get into prohibited transactions. So without getting into the details of this, the first bullet is what's most important to recognize. Any improper use of an IRA or plan by the plan participant or disqualified person is a prohibited transaction. So what's in it? Some examples of a prohibited transaction. Your IRA borrowing money from a disqualified person. Your IRA can borrow money, but your IRA can't borrow money from you, your spouse, your ancestors, your lineal descendants, right? If you want to invest in a property, your IRA can't buy a property from a disqualified person. You can't buy your parents' property using your IRA. You're also not allowed to use your IRA as security for a loan for you to personally borrow money. So if you want to buy a property and you want to go to a bank and you want to borrow money to buy that property, they can't use your IRA as security in order for you to do that. That's considered a prohibited transaction. And then also buying a property for personal use with IRA or plan fund. So that's the one that seems to be the most popular that people want to do, is they want to buy a property using their retirement account, and then they want to stay in it every once in a while. They want to use it as a vacation home. They want to use it as a vacation home, something like that. That is prohibited. It has to be for investment purposes only. You also, for example, let's say you have kids in college and you want to buy a property, you want to buy a house in that college town and have your kids stay in it and maybe their friends stay in it. Your kids' friends can stay in it and rent it. Your child cannot. They're a disqualified person, right? So those are the examples. So when it comes to real estate, your IRA, if your IRA invests in a property, a disqualified person is never allowed to stay in the property or do work on the property, can't do physical labor. So where that, people want to do that, maybe a contractor, or you have the capability of doing, fixing up kitchens, doing those types of things, and you want to do a fix and flip inside your IRA. Your IRA can buy a property and your IRA can do a fix and flip inside the property, but the disqualified person can't do the physical labor. You can't be the one that's going in and fixing up the kitchen and doing all that work. You, your spouse, your ancestors, your lineal descendants, okay? Hopefully that's clear. I'm sure we'll get some questions on that as we get through to it. So, what's some examples of things that you are allowed to do inside your IRA? Well, you can partner with yourself on a new deal, and each one of these I'm gonna give a case study. I'm gonna show you, I think. Actually, no, I don't have case study on these. Sorry, I'm confusing that with another presentation. But as an example, you can partner with your IRA on a new investment. So what would typically be a disqualified person, which you yourself, once your IRA owns an investment, you're a disqualified person from doing business with that investment, right? But on a new investment where you're buying a property from a third party and you have 70% of the money in your IRA and you have the other 30% of the money in your checking account, you can partner with your IRA to buy that property where your IRA goes on title as a 70% owner of the property and you go on title as a 30% owner, right? Or you can partner with someone else's IRA, or you can partner with a spouse. You can partner with anybody on a new transaction, on a new investment. And the key is that it's got to be a new investment if you want to partner with someone who would typically be considered a disqualified person, okay? So partnering with yourself on a new deal is allowed. Partnering with your cousin at any time is allowed because your cousin's not a disqualified person. Partnering with your spouse, again, on a new investment. Your spouse would typically be a disqualified person, but in this case, it's a new investment. Leasing the property to your siblings. So note that when I list the disqualified persons, siblings were not included as a disqualified person. So if you use your IRA to buy property and rent it out to your siblings, your cousins, your aunts, uncles, that's all okay. It's just you and your spouse, your ancestors and lineal descendants, parents, grandparents, etc., that would never be allowed to stay in the property. So here is a case study on something that somebody, could potentially do. You wanted to use your IRA to purchase a rental property that's located in the highway in Hawaii. So from Entrust standpoint, the way that we do things is that first of all, the purchase contract must be vested in the name of your IRA as the buyer. So you're not the buyer. It's not in the name of Bill Neville. It's in the name of the Entrust group for the benefit of Bill Neville, account number, and then my Entrust account number, right? That would be the entity that's buying the property. That's what goes on the contract. That's what goes on title. Now, since the IRA is buying it, Entrust has to review and sign the document, has to review and sign the contract. Now, our policy, we ask our account holder to somewhere on that document write the words read and approved and sign next to that. So this is a process on how Entrust would do it if you were buying a property using your IRA rental property. Submit the contract with your read and approved signature. We review it, sign it, make sure it's correctly vested in the name of your IRA. Your IRA buys the property, goes through the whole closing process. Now your IRA owns that. That means that all rents and expenses go into and out of the IRA. Your IRA receives the rent. Your IRA pays the bills. So if you have property taxes, insurance, utilities, maintenance, any of those types of things, you send the invoice to us. We pay it from the retirement account. If it's rented out, the rent checks come to us. We deposit it into your retirement account, right? It's your retirement account that owns the property. It's your retirement account that receives all the revenue and pays all the bills. And as I mentioned, you cannot ever stay there since you are a disqualified person and you can't do work on it, right? You can't provide any sweat equity on the property. So another example, your IRA purchases a rental property. Let's say, as example I used earlier, you have a child in college up in Davis. You want to buy a rental property and rent it out. It's fine, you can do that, but your child can't stay in it can't pay rent, can't stay for free, can't spend the night. Your child is a disqualified person. Your IRA can borrow money to purchase real estate. There are financial institutions that are willing to do what's called a non-recourse loan to your IRA to buy the property. So your IRA would borrow the money, your IRA would pay the loan back. If your IRA uses leverage, if your IRA borrows money, there is what's called unrelated debt financed income tax, or also unrelated business income tax. You'll hear it on both sides. If you are looking to invest in a property and use your IRA and have it borrow money, be aware that your IRA may be subject to what's called unrelated business income tax, or unrelated, same thing, unrelated debt finance income tax. It's the opposite side of the same coin. All right, another example, and Chris had mentioned this is something that he'd done. He's used his IRA to lend money. Here's an example of potentially helping a family member with a debt. You have a nephew, and again, a nephew is not considered a disqualified person, who is graduating from college, has $60K in debt, has 7.5% interest. You want to help him out and lower the interest rate, so you loan your nephew $60,000, create a promissory note, create your whatever interest rate you want to lend it at. Your nephew borrows the money, pays their note back, and now they owe your IRA money, and they make payments to your IRA. So potentially a way for you to get an interest rate that you're comfortable with, and also be able to loan out money. All right, so it's just a few case studies that we put together of examples of how you can use your IRA. Another thing that you might hear about when you're researching self-directed IRAs, you might hear the term checkbook control in an IRA. So what that means is, when your IRA is, there's no company in our industry who you're going to open an IRA and they're going to give you checks to write from your retirement account. The way to get checkbook control, if you want to be able to write your checks instead of having Entrust write the checks for your retirement account to buy and to pay invoices, et cetera, is you create a pass-through entity, an LLC, in which the IRA is the member of your LLC, right? So as I mentioned before, the Entrust Group FBO name and account number goes on title for property. Same thing. If you want to have checkbook control, you create an LLC where the IRA is the single member. The Entrust Group FBO, your name and account number, is the member of the LLC. You create the LLC. You set it up with the IRA as the member. You can be the manager as long as you're not paid anything to be the manager. You can't pay yourself from the LLC to be the manager. And then you go and you open a bank account in the name of the LLC. You instruct Entrust to fund that LLC account. So now the asset held inside your IRA is the LLC. And now the LLC is a pass-through entity that you can use to then go make investments in the name of the LLC, but you have checkbook control over the money. Since you're the manager of the LLC, you open the bank account, you set up the LLC. It's IRA money, but you can write the checks. You have checkbook control. So that's the big advantage of the single member LLC. It gives you checkbook control. Disadvantages, it can be costly. In the state of California, to have a LLC, it's $800 a year. You also have to maintain records, and you are subject to some tax, some filing that you have to do. It's IRA money, so it's not a tax consequence to it, but there is reports that have to be filed. So again, mainly bring this up because you're going to hear people talk about it, or if you do your own research, you're going to find the term checkbook control in an IRA, and that's what that means. It means that you create and have an LLC that's owned by your IRA as the single member of the LLC. So that's an overview of the basic concepts of self-directed IRAs. The process is really easy. You open an account, which takes about 10 minutes. Fund your account, which either you can do by making an annual contribution, transferring from an existing IRA, or rolling over from a 401k. Once your money is in your account, then you instruct us to purchase whatever you want to invest in. So whether it's real estate, whether it's a private placement, or whether you're going to do a single member LLC, we will need the investment documents. With an LLC, you would submit an operating agreement. If you're investing in a private placement, like an LLC or syndication, or you're going to loan syndication, we would need a subscription agreement. The loan, we would need the promissory note. We have to review and sign off on the investment documents, whatever those investment documents are. Okay. So to summarize, IRAs, they help you diversify, hold other investments besides just publicly traded stock, bonds, and mutual funds, which gives you the ability to invest in what you know. If you know real estate, and I'm assuming that most of you who go to these meetups, you're educating yourself about real estate. This gives you the opportunity, the ability to invest in real estate inside your IRA. Any type of retirement account can be self-directed. So whether you have a 401k, a traditional, a Roth, whatever it is, all that can be invested into non-traditional assets. Lots of investment options. Again, pretty much anything you can imagine, you're allowed to invest in it, and make sure you don't do anything that's prohibited. And that's part of where Entrust comes in, right? We're here as a resource to help you with that, to answer any questions, make sure that that you don't commit a prohibited transaction. Okay, Ryder, at this point, do you want to open it up?
Yeah. I don't know if you can see, you've got a couple questions already.
All right, let me go find that.
Should be on the bottom of your screen where it says QA in the gray bar.
Yeah, I got to get to the, oh, there we go. Okay. So I got asked, can you please cover the UBIT, UDFI implications if we're one to invest in real estate with a self-directed IRA? Well, again, it's only there if you're only subject to UBIT, unrelated debt financed income, when it comes to real estate if you use leverage, if your IRA borrows money. So I'm going to try and explain how exactly that would work. So what it means is that the way the IRS looks at that, let's say you put 50% down and the other 50% comes from your IRA, right? Then that means that 50% of the purchase of that property came from non-IRA funds. That's the way they look at it. If you're using borrowed money, whatever portion is borrowed is not considered, came from outside the IRA, so it's not subject to tax deferment or tax-free, right? It's not IRA money. So your IRA is going to be subject to tax on the portion of revenue that was generated from non-IRA money. So let's say, as an example, you buy a rental property, you use 50%, and your IRA makes $11,000 in net income, right? The rent minus expenses, it comes out to $11,000. Now, I came up with $11,000 for a reason, because the IRS gives you the first $1,000 for free. There's no tax on the first $1,000. So $10,000 that you made, of the $11,000, $10,000 is 50% of that, because you use 50% borrowed money, 50% of that is subject to UBIT, UDFI, right? So you have to file on what's called a Form 990T and pay taxes at a tax rate, and it's at a trust tax rate. So it's not at the current income tax rate, it's a different tax rate. It's based on a trust tax rate. So $5,000 of the money that you made on that rental income would be subject to unrelated business income tax, right? Did that make sense, Ryder? Did that seem to make sense to you? Did you follow what I'm saying there?
Yeah, that makes sense. I understand UBIT is a little complicated, but I think you explained it well.
I mean, it comes down to this. If you're investing in real estate and you use leverage, then there's a chance that you're going to be subject to unrelated business income tax, and just at the end of the year, have a CPA. Get a CPA to help you figure out what your UBIT is, because the likelihood is if your net income is greater than $1,000 and you use leverage, your IRA borrowed money, you will be subject to UBIT on a portion of the amount above $1,000. Can you please explain what are the qualifications for a solo 401k? You must be a business owner or be, self-employed, and you can't have employees. That's it. So our solo 401k or individual 401k plan is available to business owners without employees and their spouses and their business partners. You can all have accounts under our individual 401k plan.
So Bill, what would someone that works for a company, they're still working there, they have a regular 401k. Can you explain us what their options would be?
Well, if you're still if you're still working for the company, your options tend to be fairly limited. Most company 401k plans will not allow you to roll the money out of that 401k plan into an IRA unless you have a triggering event. And a triggering event would be that you leave the company. Now, sometimes a triggering event can be that you reach a certain age, right? It depends upon the company's 401k plan as far as whether they'll allow you to roll that money over to another custodian like Entrust to then self-direct into whatever you want. So if you work for a company and you've grown a 401k plan and you're interested in doing a self-directed IRA and you want to see if you can move some of that money over to a self-directed IRA to invest in real estate or whatever, you need to talk to your plan provider. You need to talk to your HR or just call whoever's the provider of your 401k plan and find out what your eligibility is to roll that over. If you have old 401k plans for companies that you no longer work for, well, you go crazy with that. You can roll those over to a self-directed IRA. You can roll, not just self-directed, you can roll it over to anybody you want, right? If you have an old 401k, you can roll it to E-Trade or whoever, Entrust. Once you leave the company, you're free to do what you want. While you still work for the company, you're subject to the rules of that company's 401k plan, and they aren't all the same. Different companies have different rules as far as eligibility to roll over. If they have if they allow for what's called an in-service withdrawal or in-service distribution, then that means that they're allowing you to roll over while you're still with the company and still part of the plan.
Great. Okay. And so otherwise, whenever people have a job change coming up, that would be a good time to consider this as well. That would be kind of like a natural break point.
Yeah.
Because that would be a qualifying event.
Right. And again, if you have old companies you work for and if you have a 401k, let's say you work for a company currently and you rolled money from an old 401k plan into your current company's 401k plan, you can roll that money back out. It's the money that you contributed and put in, and the company put in for you under the company that you currently work for that is potentially restricted. Yeah.
So what's your saying?
Okay.
If I work for company A and I rolled that money into my 401k for company B, and I still work for company B, then I can roll the money that I put in when I was still with company A that I rolled to company B. That part of the money I can transfer typically.
You should be able to, yes.
Thank you.
Okay, next question was, is the custodian EIN to be used for, or each individual needs their own EIN? All right, that's a really good question. So depending upon how your investment is how you are investing your money, if your IRA is receiving passive income and you need to provide an EIN number, we will provide you an EIN number. If the investment if you invest in a business in which you're getting a return on investment that's coming from a trade or business, so it's not passive income such as interest or rental income, but it's actually associated with a trade or business, then you have to get your own EIN number for the retirement account. I know that probably was confusing because it's been confusing to me, but that's kind of the rule associated with it. It's a really good question. The answer is, if you have an IRA with us and you need an EIN for K1 purposes or something like that, we might provide it to you, or you might be required to get your own. Should a 990T be filed each year one holds a leveraged real estate investment? Yes. Are leveraged CRE syndications subject to the underrated UDFI clause? Good question. The answer to that is yes. Is a recourse loan by a sponsor considered a prohibited transaction? How about if one invests as a GP in a GP fund and sponsor is taking a recourse loan? Is a recourse loan by a sponsor considered a prohibited transaction? So I'm not entirely sure what you mean by sponsor. How about if one invests in a general partnership as a general partner in a general partnership fund and the sponsor is taking a recourse loan? I got to tell you, Santos, you're challenging my knowledge here. I don't think
maybe that is something you guys could follow up on after the call. Your email.
Yeah, that might be one. Right. Yeah, those are good questions. I'd have to probably have a conversation with you, Santos, about that, and I might need even to talk to my compliance manager about that.
Also, Bill,
those are really good questions.
If any terms are mentioned in these questions, could you take like a quick moment to explain the terms for maybe the people that are not as up on all the form names and all that?
Yeah, actually, I'm glad you mentioned that, because I didn't get into this. I mentioned that your IRA can borrow money and it has to be a non-recourse loan. So what that means by definition is that the lender, the only collateral allowed to use on a non-recourse loan is the asset that is being borrowed under. So if your IRA borrows money for a property and they draw up the loan documents, the only collateral allowed is the property under which you're borrowing the money. You can't provide any personal guarantees. You can't use anything else as collateral. It can only be a non-recourse loan. So he said, is a recourse loan by a sponsor considered a prohibited transaction? So what he's saying is if somebody's borrowing money, but there's other collateral being provided or personal guarantees, that would be considered I mean, you don't hear it often just to call it a recourse loan, but I get what he's saying, which is that there's collateral being provided other than just the property under which the IRA is borrowing money. Is filing deduction of $1,000 per investment or per EIN or per investor? I'm sorry, I don't understand what you're asking me there. Can we use the custodian EIN during the hold period and switch to individual EIN the year if exit? Yeah, Santos, give me a call. We need to have a conversation. You're asking really good questions. I think you and I should just have a talk. How can an employed person qualify to open a solo 401k? Yeah, it's really difficult. I mean, first of all, you have to have a business. But if you're already covered by a 401k plan, then you're not going to be able to open your own individual 401k plan. The question comes down to whether you're covered by your current 401k plan. What it means by covered is that you and or the company are contributing to that plan. If you're not contributing and your company is not contributing, then you're not covered. And then potentially you can open your own 401k plan. But if you have your own business as well, but bear in mind, there's one thing to open a 401k, there's another thing to contribute to a 401k. If you open an individual 401k, in order to contribute to it, you have to have earned income coming from the business under which you've opened the plan. And earned income is active income. It's not interest or rental income. That's passive income. Okay? Must IRA fees come from within the account or come from personal funds? Does this become a prohibited transaction? Your IRA fees do not have to come from within the account. They can come from outside the account. That's not a prohibited transaction. Not only that, if you pay our fees from outside the account, they are tax deductible, assuming you itemize. Okay, can you create solo 401k by paying property management fees for rental property you own? Can you create the solo 401k by paying property management fees for rental property you own? I mean, your IRA, so just to be clear, I mean, I'm assuming you're talking about you have a property management company and you are, your property management company you're paying yourself fees, I guess, for the property management. So I would say the answer to that is yes, but I want to add one qualification to that. If your IRA or 401k owns a property and you have a property management company, your property management company can't be the property manager for that property. That's a prohibited transaction. All right. What about checkbook control using a self-employed 401k under trust accounting? So you guys are really asking some creative questions. The interesting thing about an individual 401k, you as the business owner become the trustee of the plan, which means the 401k is different from an IRA in that a 401k is a qualified plan. The business owner has the ability to be the trustee of the plan, which means you can have what we call our plan-only plan, where we provide you the 401k plan, but you do your own record keeping. So you don't need us to write the checks. You're going to open your own checking account in the name of the 401k plan, and essentially you get checkbook control. Now, if you're going to do your own record keeping, then you're responsible for keeping good records. You're responsible for filing reports to the IRS. You're responsible for doing all that, and we simply provide you the plan documents. We don't have any role in administering the account. We just provide you the plan. So that's, I mean, with a 401k, with an IRA to get checkbook control, you need to go the LLC route. With a 401k, you don't need to go that route. You just need to just have the plan and then self-record keep it yourself, and find a bank who's willing to open a bank account in the name of your 401k plan, right? Because the bank account won't be in your name, it'll be in the name of your 401k plan. Name your 401k plan is going to be, if your company is ABC Company, name your plan is going to be ABC Company, ABC Company 401k plan for the benefit of you, right? That's the name of your 401k plan. I have a K1 with box 20 empty. Does it mean I don't have any UBIT income? I don't know K1 forms that well. I don't know what box 20 is. I'm sorry, I'm not an accountant. Just to confirm, are capital gains that are realized from a property sale taxable if the property was purchased from a traditional IRA? All right, so I'm going to stop your question at that sentence and tell you that capital gains are not applicable inside an IRA. Your IRA receives the rent, the IRA receives any revenue, and all you did was simply grow your IRA. It's no different than getting a dividend from a stock in a company or dividend from a mutual fund. You just simply grew your IRA. So there is no capital gains. It doesn't apply when you're talking about an IRA. More specifically, can I purchase another property with the profits if not taxed and left in the IRA? Do I have to do a 1031? No, you don't do a 1031. You now have cash. If you've been getting rent for 3 years and you sell a property and you've got all kinds of money in there, just go buy another property, or don't. Put it in a mutual fund. Do whatever you want with it. There is no 1031 exchange. There's no capital gains tax. All you did was simply grow your retirement account. You're free to invest that money any way you want. If under simple self-directed IRA we have income, cash flow, leveraged income, what happens in a year the income is less than $1,000 from leveraged part of real estate investment? Do we still have to file UBIT? I don't know if you have to file the form. I know you won't have to pay it. You won't incur any UBIT. I'm not sure whether you have to file the form or not. That's a question for a CPA. Sorry. Can you go over the fees? $50. Normally it's $50 to open the account. We waive that fee for any Ryder and Chris associated referrals. Anybody with their meetup. The transaction fee to process an investment is $95 for non-real estate, $175 for real estate, and then we have an annual fee of $299 per asset per year, or a fee based on the value of the account that could potentially be lower than $299 a year. It could be $199 a year. That's our minimum. Our fees are on our website.
Yeah, I was just going to say, on your website, there's a very clear one-page document that just breaks them out. It's very clear. I'd recommend people go and download that. It's very transparent.
Right. Anonymous asks, how do you get money into a Roth IRA above the more normal deposit limits? It's called a backdoor Roth. It's a little loophole. What you do is you contribute to let's say a SEP. I mean, first of all, the contribution to a traditional and Roth are the same, $5,500 unless you are 50 or older, and then it's $6,500 as long as you have earned income of at least $5,500 or $6,500. How do you get more money into a Roth above the $5,500 or $6,500? Contribute to a SEP or a 401k, an individual 401k, and then convert it to a Roth. It's as simple as that. So you contribute it to a tax-deferred plan, but then in that same year, convert it to a Roth, and then don't take the tax deduction whenever you make the contribution. Talk to a CPA about that. They should be able to explain it. Can you partner with your spouse's IRA funds on a deal? What about in an LLC? The answer to both of those is yes, as long as it's a new deal or a new LLC, right? You can partner both your IRAs, you and your spouse's IRAs, as long as it's a new investment or as long as you've created a new LLC. If you already have an existing property, you can't bring your wife's IRA, your spouse's IRA on later, and the same with an LLC. If you already own the LLC 100% in your IRA, you can't add your spouse's IRA on it later on. But if you're creating a new LLC or purchasing a new asset, you can partner them together and you just create percentages, your IRA and her IRA at 50-40 or 60-40 or 50-50, whatever it ends up being. Does UBIT apply only to distributions, or does it apply at the time of sale? It's all revenue generated by the investment, so it would apply to time of sale. Do you need to pay tax again for the UBIT paid money at the time of withdrawal? Well, that's a different tax. At the time of withdrawal, you're going to pay income tax based on what your income tax bracket is at the time you do the withdrawal. If there's a way when you do the distribution to somehow back out that UBIT, I don't know what that is. Again, I'm not. You guys are getting into some sort of CPA area, like filing stuff with that's a question to have with a CPA. So my impression, with withdrawals, you have to pay income tax. If there's a way to back out what you already paid as far as UBIT and have that lower the income tax, I don't know what that is. I would, again, suggest you talk to an accountant. Is the state tax filing for the state the property is located in, or the state the investor resides in? Is the state, I don't know, again, not a CPA. Is the UDFI on sale going to be 20% or 39.6%? So it's at trust rates, which is neither of those. The trust tax rate is different than all of that, and what it's going to be, I don't know. Again, not a CPA. How do we capture depreciation or carryover loss, if any? It doesn't apply. You don't depreciate. So we have to always file UBIT tax. So your IRA owns the property. So when you depreciate or do any carryover loss, you're filing that on your personal income tax. But when your IRA owns the property, there is no filing on your personal income tax because you don't own the property. Your retirement account owns the property, and your retirement account doesn't file taxes, right? The retirement account grows, and then when you take a distribution from your retirement account, you report that on your personal income tax. But things like depreciation or carryover loss is not applicable. It just is a way to either grow your retirement account or not grow your retirement account. Do we have to always file UBIT tax? You only have to file it if you're subject to it, which means either your IRA is using leverage or your IRA owns a business. Right? I didn't even get into that, but the two sides, unrelated debt financed income tax, is when your IRA borrows money. UBIT is when your IRA is running a business. So let's say your IRA buys a franchise and is paying employees and is receiving revenue and blah, blah, blah. Your IRA is running a business that's subject to UBIT. So you have to file UBIT if you're using your IRA in a way that requires you to file UBIT. I have 2 rental properties inside my IRA, a couple other. I've never once filed 990T because I'm not using leverage. I'm not required to. Wow, a lot of UBIT questions. Who is responsible for filing UBIT, custodian or sponsor or individual? The Entrust group would file it, but you would complete it and send it to us, and then we would sign it and we would send it in along with the check. So your IRA is responsible for filing it, right? And that I should qualify that. It's not that the Entrust group is. Specifically, the Entrust group, for the benefit of your name and account number, is responsible for filing your UBIT. But you as an individual are responsible for getting us the 990T completed and requesting us to sign it and send it in. Everything we do is signature only. We don't fill things out. Do you need to file a state UBIT if you're investing in out-of-state syndication? I don't know. Talk to a CPA. Does Entrust look at investment PPM and advise it needs to UBIT? We do not. I work for a company, and I'm going to come back to that and just answer. We don't advise on anything. If you wanted to talk to me about, you know, how your IRA is investing its money and what the PPM, what the company that you invest in is doing, I can give you my opinion. But this is tax stuff, and I'm not a CPA. I don't know if I've mentioned that. You would want to talk to a CPA about that. I work for a company, and say I put $17,000 in 401k company plan. Okay. I also do some selling in eBay and make $5 to $10K a year part-time self-employment. Can I put $1,000 in my self-employed 401k and roll my IRA previous employer into current solo 401k and get rid of UBIT filing? So to answer your first part, I don't think so. I think because you're covered by a 401k plan, you can't put money into your individual 401k plan. But honestly, I might be wrong about that. I'm not even entirely 100% sure I'm right about that. So you may have heard me say this, but ask a CPA. Roll my IRA previous employer into current SO and get rid of UBIT filing. I guess I'm not really following the last part of it, but again, these are a lot of these questions are best to talk to an accountant. They're getting into some very specific like accounting, CPA kind of questions. If I invested with my IRA, does the revenue split according to the invested amount from each party? That's exactly right. If your IRA owns 40% and somebody else's IRA owns 60%, then that other person's IRA receives 60% of the revenue and is responsible for 60% of the expenses, and your IRA gets 40 and is responsible for 40. Do you guys charge fees to open an IRA account and maintain it? Again, we waive the new account establishment fee because Ryder and Chris, but yeah, we charge fees. That's how we keep our lights on. Can you transfer a 401k anytime, even though you left the company years ago? Yes. And I'm going to be pedantic about the wording. It's a rollover when it's a 401k, not a transfer. If it goes from an IRA to an IRA, it's a transfer. You don't need to know that, but like I said, I'm going to be pedantic about it. Can one create a solo 401k only for rollover of self-directed IRA and not contribute to it? Sure. Wondering how I can avoid UDFI with a solo 401k even though I am employed. Well, UDFI is only going to be if your account is borrowing money to make an investment. I mean, you're not always subject to UDFI. You're going to be UDFI if your account borrowed money, or if you invest in an LLC and the LLC borrowed money, you might be subject to UDFI or UBIT. It depends, but you're not. I don't know if people get the impression that every single retirement account is subject to UBIT, UDFI. It's not. It depends on how you use your account.
If I may, I think a lot of people on this call are interested, just like Ryder and me, to invest in syndicated deals, which are basically an LLC, and most syndicated deals, in order to get the high returns that they can often yield, they use leverage. They use leverage, exactly.
Right, and you're not going to avoid
where most of these questions come from.
And if that's the case, if your IRA invests in a syndication that's using leverage, then your IRA is probably going to be subject to UBIT. But you need to run it by an accountant.
Yeah, but what also my understanding is that there's just because of the type of investment, it is real estate, there are usually a lot of deductions within the investment as well. So that's something you want to talk to your syndicator about. Like, do they anticipate a lot of depreciation and such? Because that would bring the UBIT down, as far as I know about it.
Yeah.
Hey.
Yeah. Again, I mean, my experience with UBIT is largely that I have a general understanding, and that we have to file the forms. But I mean, we don't complete the forms. I don't calculate the UBIT for you. You have to have a CPA help you do that. We don't complete the 990T for you.
Hey, Bill.
Yeah.
We're getting close to 7:30. I have one question, and then I'm going to let you take maybe one or two more from the list that you want to pick from. And then if everybody can just hang on for a few more minutes, I have a big announcement that I'm sort of saving to the end. So one question I have is, what is the deadline for 2018 filing with self-directed?
Well, with any are you talking about, what do you mean by filing with self-directed?
So for like 2018 taxes, is that the same? Does it align with?
Yeah, it's just contributions by April 15th if you want to make a contribution for 2017, you have until April 15th of 2018 to make a contribution. I mean, it's a retirement account, right? It's still the same rules. There's nothing different about self-directed from that standpoint.
Okay.
All right, so there were a bunch of questions that somehow repeated itself, so I'm gonna skip over those. So last couple, where are you based? Oakland. Also, can I roll over real estate assets from one self-directed IRA to another? You certainly can. it would just involve re-registering the asset. Can you roll over IRA into solo 401k? Absolutely. And you use the correct term, rollover. Can I convert a traditional self-directed IRA to a Roth IRA? You certainly can. If yes, and I hold a property in self-directed IRA, what's considered fair market value of the property? You have to get an appraisal. That's what's considered fair market value. Is there one Entrust account and associated fees when partnering with spouse's IRA? Do we need to set up an Entrust account for each IRA when partnering? You'd need to set up 2 different accounts, one for you and one for your spouse. Wow. So really, seriously good, challenging questions. They were really, you guys kind of put me on the spot a little bit.
I have one more question, Bill, and this was not entirely clear to me during, your Q&A session. So are you or are you not a CPA? I want to.
All right.
All right. Yeah. I'm sure they're going to mention it. They're going to get their big announcement, but note that I will be, if you guys are local, we'll be at their meetup in March to present. So if you want to come by and answer the questions. Santo, you had a lot of questions. Please, my contact information is right there. Call me, email me, and we can talk some more. You had a lot of questions, so you're welcome to reach out to me anytime you want. Ryder and Chris, as always, thank you for including me in what you guys do and being supportive of the whole concept of self-directed IRAs.
Cool. Thanks very much, Bill. We appreciate that.
Yes, definitely. So Ryder, what is this big announcement?
All right. So let me reclaim the host.
Is this the part where everybody gets a free car?
Exactly.
Another show?
Exactly. So, as some of you may know, and some of the group is on this call, we actually had the first sort of team project that a group of us from the VIG went in on, a syndication. It was a self-storage facility in Milwaukee with a couple of investors out there. So we were really happy with getting that closed last week. And to celebrate, Scott and Martin, who sort of led that project, have decided to come out here, meet the people that invested with that, as well as the rest of our group, and throw a pretty badass party. So we're going to have a private rooftop venue in the FIDI. It's going to be December 18th. It's a Monday night around 6:30. And so this is kind of a private event, so you're kind of the first to hear about it. I'm going to share a link in the chat. So for anybody that is going to be available, hopefully you'll join. This is going to be a really awesome party. They're catering it. It's an open bar and some amazing views of the city. So I'm going to chat that out now. You can RSVP. It is a pretty short list because the venue has a capacity. But the first, I think it's 70 people or 75 people will be able to come out. So I just chatted that out. And then, Chris, did you have anything to add to that?
Well, the only thing I wanted to say, it's kind of funny that we're announcing that deal closing party now because guess how we invested in that deal, right?
Exactly.
From our self-directed IRAs or respective self-directed IRAs. Good. Yeah, I don't have anything else to add. I want to thank everyone for attending this session. And like I said at the beginning of the webinar, it's if you have any questions, Bill has been very helpful to me, and I'm sure he'll be helpful to you as well.
Cool. Thanks, everybody. Have a good night.
Thanks, guys. Good night.